That first one there is hourly rate return. Now, my perspective is there. If you think of what target hourly rate you have as a firm owner, my guess is that you may be underselling yourself. If you think of like some of you might have an hourly rate and you've got it straight in your head, some of you might have a benchmark or thing you might work to. I just want you to keep that in your mind, and I want to switch to one of the calculators that I've got here. Just give me a moment. So this calculator I use to check that our hourly rates for our different team are appropriate. Now, if we just have a look at the partner, let's just look at this. So I talked before about in an accounting firm, you should have a market salary paid to you, and then there should be profit left over at the end. You shouldn't look at your profit plus salaries and think that's my that's what I'm focused on bringing home, whether it's 200 or 300 grand. In my opinion, I think we need to be taking home 200K ideally as a salary, and then there's profit left over at the end of the day. Now, what this calculator does, it adjusts for different people's roles, whether it's the amount of hours in a year that they work. But what we want to do with this calculator is work out how many hours is the person going to be roughly billing a year. And then therefore, to pay for their salary, and then to produce a profit, what does our hourly rate need to be? So that's the goal. Now, the next line here is working weeks per year. So it excludes leave and public holidays. I mean, 44 weeks of the year is in here versus, let's say, 52 total weeks. So there's already a 8-week difference there. And if we look at total hours each week, again, all these numbers you can tweak. I would not, if you're working 50-hour weeks, I would not put 50 hours in here. I would work in what is the amount of hours you want to be working to work out what your appropriate rate should be. Productivity percentage, again, the more senior the person, probably the more things you're going to be dealing with in terms of operationally in your business. So that's why I haven't got, client billing or productivity chargeable hours versus total hours so high as a partner. You might want to even drop that. The more you drop it, the more that hourly rate's going to go up. Total hours charged each year. So this is a calculation of those three things. And then average write-offs. I don't advocate for write-offs, but I've left it in here for the firms that do want to incorporate something around that. And then hours actually billed, net of write-offs. So yeah, if you've got 10% write-offs, you're only really billing that many hours. And then the rule of thumb. So back when I started accounting or running a business, accounting business, I was told that ideally we for every dollar of revenue that comes in, 1/3 of that goes to profit, 1/3 of that goes to wages, and 1/3 of that goes to OPEX. And so if we want to earn 200 grand in terms of wages, we want to times that by 3 to get our rough billings of what we need to be billing just for our hours. So this is how the calculator works backwards. So if you want to put 3 in, go for it. If you want to say, well, hang on, I want a 3.5 times return to add a bit of margin in there, you're more than welcome to do so. Again, you can sort of calculate this yourself. And what that does is it produces target chargeable rate per hour. So what you can do from here is, and this is why I've sort of built other roles here, is you can actually price, show what your hourly rate is, your target rate is, if you do hourly billing, or use this to build your fixed prices for, BASs or tax returns, year-end financials, whatever it is. And we also use this to price our subscription services as well. Actually, Manuela, I do have a link for people who do want access to this tool here. I think you may have access to push that to. Yep, very good. So if you do want the hourly rate calculator, I do have that button that's that side of me. Sorry. We'll take you to a link where you can get access to that. The other thing that is included in that tool is also 12 reasons why you should increase your prices. So someone in the chat box asked, and even the results of the poll earlier is around, like, how do I justify my price increase? Well, I've just given 12 reasons in a Google Doc, and you can get that in the same link. And again, that's what I use to brief our team in terms of increasing our prices with our clients. Alrighty. So I've talked about the hourly rate return, making sure that our hourly rates are appropriate. And so if just remember from that, what I shared in that calculator before, it had $500 or $600 an hour for the partner. I see too many 300, 400 an hour, even less than that. Sometimes we aren't charging enough. And I even see it in service providers. If I use the same logic for our IT service provider and they're charging $150 an hour, I mean, we almost charge out our offshore team for that. I do not know how people make money out of low target hourly rates when it comes to highly skilled people. Especially ourselves. Like, I reckon we need to be $500 an hour to get access to us at a minimum. All right. We can use that to build our product pricing, and then also profitability comes through checking for accurate scope. When we did our price review, and I said those figures before, I reckon there was probably about a 60-40 split, where 60% of our net result would have been from just applying price increases consistently across the client base. And then about 40% of that total increase might have been for the actually accurate scope increase. Again, we had a bit of a mess on what we were billing and weren't billing across the whole client base. Check for accurate scope, have systems around it.